All right, welcome to the February market update for Los Angeles County. We're going to be taking a look at the numbers and getting into some fun stuff here. But first, a quick comment before we get started. You may have noticed that I have not really put out any content for the month of January into February. Part of this was just taking a break. Sometimes we have to take a step back. And as you're going to see, there really hasn't been that much going on in January anyway. That's very normal and traditional for the real estate market. But the market is gearing up and moving forward. And so let's jump right into it and check it out, see what's going on. Existing home sales totaled 5.64 million in 2020. That's up 5.6% from 2019 and the most since the Great Recession. This is from the National Association of Realtors. We are seeing existing home sales across the country at record rates, record pacing. We haven't seen this kind of pacing in a long, long time. Part of this is due to the overall demand for single-family houses as opposed to other product types. And we are seeing migration trends where people are actually moving out of big cities and into more suburban, tax-friendly states. This includes California. California has been purging, especially San Francisco, San Jose area has been watching a mass exodus, which was predicted, actually. If you go back and look at the San Francisco Chronicle, they do their annual survey of who's moving, where are they moving, and where are they moving to, and are they staying? And it was a couple years ago in which people just said, we're done. The prices are too high. We're out. We're going to go take our money somewhere else. So no real surprise. I did post a quick trend of U-Haul on the Instagram. They posted their migratory trend patterns from 2020, and I connected with their reps. And it appears LA, for the most part, remained flat. Now, that seems kind of counterintuitive with the number of vacancies and in the rental market available. So we'll see if that holds true. There are other moving companies out there that may have better or more impactful numbers that to be reviewed. But for the most part, when it comes to transactions, we are anticipating that 2021 will exceed 2020 as far as transactions goes. You can see this on this slide right here, that the forecast is anywhere from 6.7 to 7.5 million homes sold is guessing this year. As we push forward, when we look into the price appreciation component of this, home pricing overall, they're anticipating 5% increase from last year in prices. This is higher than the 3.2 to 3.8 kind of range for historical average of price increases in the United States. Anything above that number is stellar. You can't beat that. But 5% projected for this year. As far as mortgage rates, I am expecting more fluctuation in the mortgage market, and the only reason why I say it is because we had a lot of volatility in the bond market this past week. Especially Thursday and Friday, we saw some major moves in the 30-year, the 10-year, and the 5-year, all dropping in price. Well, why do we talk about price when it comes to the bond market? Because the yield, the percentage charged, or the percentage given, is inverse to pricing. So if price drops, the yield rises. So that means interest rates are going up, basically. As far as mortgage rates, you still can capture if you are in, the conforming loan rate, a 2.875. If you're a top tier borrower with 25% down, you're going to get that rate. But you got to move quickly. I don't think it's going to be here long. This chart is actually projecting that 3.2 by 2022. I think we're going to hit that probably by summer. So 3.2 area. Pretty quick. I'm not expecting it to do this. This is my own personal kind of watching the market and seeing what's happening. Rising interest rates reduce house buying power and affordability, but are often a sign of a strong economy, which increases home buyer demand. By any historic standard, today's mortgage rates remain historically low and will continue to boost house buying power and keep purchases demand robust. That's Mark Fleming, chief economist at First American. Quoted him quite a lot here. And here again, we can see some of the mortgage rate projections for the near-term future. I do think we'll see it move a little bit faster. That's my personal opinion, not the professionals here who we are quoting. So, where is all the listing inventory going to come from? Well, some people will feel comfortable listing their home during the first half of 2021. Others will want to wait until the vaccines are widely distributed. This suggests more inventory will be for sale in late 2021 and into the spring selling season of 2022. So some people are going to wait, some people are going to sell right early. But you can see in this chart that we are at historic inventory lows. This means that there is not enough housing out there to meet the demand of the number of people who are qualified and capable of buying. There is a tale of two cities here. Los Angeles is experiencing this as well when it comes to single-family houses, not so much when it comes to condos, and it is creating an upward price momentum in the marketplace. Total housing inventory at the end of December totaled 1.07 million units. That's down from 16.4% from November and down 23% from 1 year ago. That's 1.39 million. Unsold inventory sits at an all-time low of a 1.9 month supply at current sales pace, down from 2.3 months in November and down from the 3-month figure recorded in December of 2019. NAR first began tracking this in 1982. This is from the National Association of Realtors. So when we talk about it, we've had some shifts in the way that people perceive homes in the past year. And many people are aware that a lot of people have gone to working from home. And the consensus of the percentage of the workforce population is going to be working from home. I mean, in 2020, it jumped from 6% to 21%, as you can see on the slide. However, they do predict that that will start to fall off, but I don't think it's going to be as aggressive and as fast as people want to say. I mean, 18%, yeah, that seems reasonable. Going down to 12%, I don't know about that. We'll see if this lifestyle change is permanent. Part of the reason why is that so many corporations, and I have clients who sold their homes and moved out of state, and their offices are here in Los Angeles, and the corporations have just said, don't come back. It's okay. You can work remote from here on out. And these are major corporations. So there are impacts both in the office space and the housing space as to how many people will actually remain remote and how many will actually come back. It's an interesting time to see how these cultural shifts are happening. New home sales activity, both mortgage applications and home sales, ran at a pace considerably ahead of 2019, showing the ongoing strong growth in housing demand and new residential construction. So the top 3 reasons why people aren't listing their home right now, really it's 31% said financial uncertainty, 34% said just life uncertainty, and 25% just cited COVID-19 health concerns and listing their home and being able to move around and get relocated. This is completely understandable. Okay, so I know I have a contingent of people out there who think that the sky is going to fall because of all the forbearances that are out there. Well, first off, let's talk about the actual number of forbearance properties that are on the market. And I've heard this misquoted multiple times, but when it comes to housing, actual for sale housing, not rental housing or rental properties, that number is just 2.67 million homes out there in the market. This is only 5% of the total housing number that is out there. It's a very small number. Now, are we going to see foreclosures in the future? Yeah, we probably will. We'll probably see some foreclosures, but here's what's going to happen. People are going to just turn around and sell them. Why? Because they can. They have equity in their homes. Almost every single market has equity in their homes right now. And I've shown you that chart before, and we're not going to do it this time. We'll go back to it next month and see if there's any updates on it. But on this chart, we're basically seeing that an exit from the forbearance plan, that means people who were in forbearance, who closed out one way or another, of that, 28.6% made their monthly payments. They got the forbearance deal, still made their payments. The remainder of a 51% either paid off the loan or brought their past due payments current. So they're fine. Now, the remainder, there's some stuff going on. They'll rework their payment, and there's 15% of that is still in trouble. So if you take 15% of the 5%, that is 1.1%. No, less. That's like 0.6% of 2.67 million homes that are in trouble. That does not spell a massive foreclosure wave. So, sorry, not going to happen. But given the huge price gains seen recently, I don't think that many homes will have to go to foreclosure. I think that homes will just be sold, and there will be cash left over for the seller, even in a distressed situation. So that's a bit of a silver lining in that we don't expect a massive sale of distressed properties. What did I just say? It's not happening. When you look at the distressed property sales as a percentage of total sales, we're at 1%. Guys, that's not even close to the 35% that we saw during the Great Housing Crisis. So no forbearance, no massive foreclosure wave. If you want a home, you better just get out there and negotiate a price and get one. Affordability in today's market. So housing affordability is better than it really ever has been in a long, long time. We did see at the beginning of the market crash, when there was tons of inventory on the market, prices went down, mortgage rates were brought lower, and it enabled people to get into houses and at a great price and a low rate. Rates are lower than they were. They're lower now than they were in 2007, 2008. Much lower, by almost a full half a point. So what we've seen that caused this increase in affordability is two things. One, we have lower rates, and two, even though we've seen price appreciation, we've also seen income appreciation. In fact, the past 4 years was some of the greatest income appreciation that we've seen in a while, and actually brought it up to where people could actually afford even more home, which was fantastic, as the unemployment rate also dropped to extreme lows over the past 4 years. But this is reflected in this as well. You can see that the percentage of income needed for a mortgage payment decreased dramatically. And again, that was two things that happened. We had lower rates, and we had lower unemployment and more income. So it really helped drive affordability forward. This is a quick slide. I almost deleted it, but I threw it in for giggles, just because this shows and demonstrates what the current typical mortgage payment is across the U.S. right now. Guys, this is not reflective of Los Angeles. Our mortgage payments are about 3 or 4 times that. So it's just, take it with a grain of salt. This is a national number. Once you include the equity benefit of price appreciation, owning made more financial sense than renting in 48 out of the top 50 markets, with the only exceptions being San Francisco and San Jose. Well, what did I just talk about? San Francisco and San Jose have people leaving them right now. They're moving out. One of the number one inbound markets in California right now is San Diego. And they're on fire. Los Angeles, kind of flat, but you get outside Los Angeles, pretty hot. Interesting. We'll see how it goes. All right, single family active listings actually are at some of their lowest. This is the lowest that we've seen, guys, in well over before 2010. Extreme lows, 7,000 units roughly. That is a 33% decline year over year in the number of active listings on the market in January. With pending sales also falling more than 11% at 2,844, as you can see on the chart. Really, really extreme lows. Single-family closed sales, however, are still sitting pretty much in the median. They did slow down a little bit, but it's a gain of 14% year over year in January. And we compare the closed sales to the active listings over time. This is a 5-year chart, almost 6-year chart. You can see that the number of active listings on the market has actually gone down, and we've maintained a pretty consistent level of sales closing with a little dip at the beginning of 2020, right during COVID period starting out when everybody was just on hold trying to figure out what was going on. The single family median home price still in the top tier at $787, and that's a 15% year over year increase. You can see it pulled back a little bit on the chart, but it's still maintaining pretty high numbers overall. The average price per square foot is still sitting close to its high. It is a 14.8, almost 15% increase year over year in January. And when we look at the breakout of the different property types, this chart is basically anything under $1 million is the bottom line. The $1 million to $2 million is the middle line. The $2 to $5 million is the third line up. And then the top line that you see on the chart is $5 million and over. What this demonstrates is really that we've seen general, slow, consistent price appreciation over time. And that it is fairly stable in most categories. The ones that are a little bit erratic is when you start getting above 2 million. It bounces around a little bit. But, you know, when you get into the luxury market, it's such a speculative market. It's really whatever somebody wants to pay for a property, they will kind of a market, because it's not, money isn't an issue. That's the one that just goes crazy. And so developers they'll overbuild, they'll underbuild, and it's nutty. So you can see that from the chart that one has the least price stability. The total months supply, as we mentioned on a national average, well, it holds true in Los Angeles as well, is 1.9 months. That is a 30% decrease year over year in inventory. That means that we are at crushing lows in the amount of inventory. If you are thinking about selling your home, give me a call. Let's talk about it, because there are a lot of buyers out there who are ready and willing to buy. This chart is one of the charts I started a while ago when I was noticing there were a lot of homes that were not selling and being pulled off the market. Some of them repeat kind of no-no agents out there, you know, withdrawing, putting stuff back on, withdrawing and putting stuff back on just so they can try and get attention. You're not supposed to do that, by the way. Just saying. But there are homeowners out there who cannot sell and have not been able to sell. And part of this just has to do with price. People are not willing to pay for the price for what it is that you're offering in the market. And that's just something you have to kind of come to terms with. I'm happy to discuss your situation if there is something that you would like to consider, or you're thinking about bringing your home on the market and you've been on the market previously. Please give me a call. I'm happy to discuss and make suggestions to get you back on, get you sold fast. Okay, so this is one of my favorite charts. This is a demonstration of supply and demand when it comes to housing and how it plays out in the market and with the inventory. As you can see on this chart, there it shows the active and the closed, and then the average price per square foot. The top line is the average price per square foot. The active is the middle blue line, and then the bottom line is the closed. As you can see, over time, we have had consistent sales in the number of closed listings. This is just ongoing. It's consistent. It's bounced around a little bit, but we are seeing consistently closed sales. What we have been seeing since the Great Recession, which is shown on this chart, is that the amount of inventory that is out there and available in LA County has shrunk dramatically. It kind of bounced along for a little while, but it's at all-time lows. So there is, this is some of the lowest inventory we've ever seen. All right, condos. Fun, fun, fun. So the number of active listings in the condo market has fallen. It was at significantly high levels over the past year previously during the course of the year, but has pulled back more to its middle range. The number of pending sales, we did see a spurry of pending sales there, and it has also pulled back more to the lower middle range that it typically sits at, about a 10% decrease year over year. Condo closed sales were up, though, in January by 16% at 867. That's a good sign that we are seeing consistently closed sales, and it is above the average, what it tends to be. And the median sale price did rise over last year's period, but did pull back as well over the past 4 or 5 months. And we can see that here, only a 2.6 year over year gain in January. And about $500,000 is the average price for a condo in Los Angeles. The average price per square foot is $529, and that is roughly a 4.8% increase year over year. And the average condo price per square foot range. And again, one of my favorite charts. We talked about this. This one demonstrates the blue line is sub 500,000. The orange line is 500 to 750,000. The gray line is 750 to $1 million, and the top line is anything over $1 million. Again, as you can see, the $1 million and above looks like a frenzied Mario Kart race. The ones below do show some consistent moving over time. We did see a pullback in the beginning of last year during COVID, and I think that was representative of just some sales that just needed to go. But overall, pricing is fairly stable in a range. Last but not least, month supply. We did hit close to 5 month supply last year in the condo market, but we have pulled back to 3, but it's still a gain of 11% year over year in number of condos for sale. Let's take a quick look, wrap it up. The lease and rental market, we're using apartments.com as our kind of metric to just, monitor the market and see what it was. Part of the reason why is because apartments.com does a good job of aggregating all these different lease information into one particular spot. That said, the current inventory is roughly 40,000, and previously, the last time we measured it in December, was 41,000. So we've had an absorption of roughly 1,000 units. This includes not only apartments, but homes, condos, townhomes, and other product types that are available for rent. Again, my name is Dennis Maynard. Thank you so much for spending just a little bit of time with me to go over this stuff. This is important if you have the kind of nerdy interests that I do and geek out on numbers and supply and demand and housing. I hope you enjoyed it. Please reach out with your questions, and if you need any help buying or selling a home, or buying or selling an investment property, apartment buildings, retail, commercial, office space, industrial, and even if you want me to get into do some hotel development, I'm happy to help you with that as well. Take care.